Is income tax payable a current liability? Have you ever wondered how companies manage their tax obligations? Today, we are going to answer a key question. Is income tax payable a current liability? Let's break this down in simple terms. In accounting, a liability is something a company owes to another party. This can be money, goods, or services. Liabilities are divided into two main categories: current and long-term. Current liabilities are debts or obligations that a company expects to pay off within 1 year from the balance sheet date. Examples of current liabilities include accounts payable and short-term loans. Now, let's focus on income tax payable. This is the amount a company owes to tax authorities, such as the Internal Revenue Service, for income earned during a specific period. The calculation of this amount is based on the company's taxable income and the applicable tax rates. Since this tax is typically due within the next 12 months, it is classified as a current liability on the balance sheet. When a company determines its tax liability, it needs to record this in its accounting system. The process involves making an accounting entry. The company will debit the income tax expense account and credit the income tax payable account. This entry acknowledges the expense and the obligation to pay the tax. Once the company actually pays the tax, it will debit the income tax payable account and credit cash. This action reduces the liability on the balance sheet. It is also important to note that calculating income tax payable can sometimes be tricky. Differences can arise between accounting rules, like generally accepted accounting principles, and tax laws. These differences can affect how certain items are recognized or when expenses are deducted. Such variations can impact the timing and amount of tax payable. From a tax and accounting perspective, understanding income tax payable as a current liability is essential for accurate financial reporting. This classification ensures that the company's obligations are clearly reflected in its financial statements. This clarity helps both management and external users assess the company's short-term financial health. To sum it up, income tax payable is indeed a current liability because it represents a tax obligation that must be settled within 1 year. Properly recording and managing this liability is a key part of financial accounting and tax compliance.